You want to talk about where we're going?
I do, yes.
Okay, so...
Please tell us more. Easiest job in the business right here.
First, we got to extract ourselves from our dysfunctional relationship with the rest of the crypto industry. And then we're taking over. The extraction part is, well, the crypto bros are helping us with that, right? They're helping. When we try to explain the difference between a centralized staked token and a decentralized proof of work token, we now have a few better examples, right? I think the meltdown of Terra and the meltdown of Luna and the meltdown of the Wildcat exchanges, the meltdown of FTT, the meltdown of FTX, all of those has put the fragility and the defect in architecture of the crypto industry front and center. The regulators have been rousted out of bed, you know, to go on television to answer questions. Congress has been lit up. You're going to see every agency thinking about this. You're seeing mainstream media writing about this. The Wall Street Journal has got story after story after story after story after story. And unlike writing stories that, well, crypto is like Bitcoin except more energy efficient, that was the story a while ago. The stories now are, well, and you saw it when I was on CNBC, I said, well, BTC is not FTT, and every one of the anchors nodded and said, yeah, you got that right. It's pretty obvious why. So the meltdown of the crypto ecosystem is educating an entire generation of mainstream journalists, mainstream investors, mainstream regulators and policymakers. And they understand that now they have to do something, and the regulation that's going to come is going to stop the scams, it's going to stop the self-dealing, it's going to provide a framework by which people start to understand the difference between an ethical, economically sound, technically sound asset and a fair, equitable, principled approach versus an unethical, uneconomically sound, untechnically sound, you know, unregistered security. So I think that that's a big part of what's going on right now. I think another big part of what's going on right now is the other side of this, which is investors in the mainstream are going to understand, based upon results, why a digital commodity is a better idea than a digital security. And that's happening in front of our face. I also think that regulators are going to have to move. They're going to move much faster. And as they move much faster, they're going to lay down expectations of the registration process to become a digital security, a digital currency, a digital exchange. Especially those three. Those are going to be hot buttons. And as that happens, what you're going to see is that 98% of the stuff in the crypto ecosystem is going to shake out. There's going to be a few strong players that will go through the registration process, and they will grow up to be a registered, fully disclosed currency, like a Circle or a Tether will have to become registered and regulated. There may be a few digital securities. There'll be a massive fight over what that means and what you can do with it. The digital exchanges, both the crypto exchanges and the DeFi exchanges, will have to register, and this entire Wild West environment will start to dissipate. It'll be like the meteorite that hit the Earth, 80 million years ago, and a lot of stuff will get wiped out. A few things will rise out of the crypto ecosystem that'll be cleaned up, and then a lot more mainstream actors will enter this space. Mainstream investors, mainstream banks, mainstream financial providers, registered companies, and the entire industry will take on a new character. And now, let's talk about the moving forward. Well, first, the ideas. The crypto industry has some good ideas. One good idea is a digital commodity, the ability to move something of value point to point between 20 billion computers at the speed of light and program it with final settlement. That's a good idea. It has not nearly been fully realized. At the point when 8 billion people are swapping value back and forth, and at the point where millions, if not tens of millions of websites are swapping value back and forth at high frequency, and I mean like 100 times a second, 1,000 times a second, million times an hour, billion times an hour. When that happens, we'll have realized the potential of a digital commodity, because that is the true internet of money, money over IP. And Bitcoin is the first asset that could serve as a digital commodity, and Lightning is the first open protocol that we've seen, open, permissionless, ethical protocol that has the transaction speed to traffic digital commodity. And of course, as we know, a digital commodity is something of value that moves through space. A digital scarcity is even better than a digital commodity. A digital scarcity is an absolute capped commodity, 21 million forever, right? If Bitcoin had been built without the halving protocol, and it just kept adding 3 or 4% of the supply for the next 1,000 years, and it was otherwise distributed in an ethical fashion, it would be a digital commodity, but it wouldn't be a digital scarcity. In the absence of the real Bitcoin, it would be the best idea right now. But in the presence of the real Bitcoin in a market, the digital scarcity would actually get the majority of the money for long-term store of value. And the digital commodity would actually just be a short-term, convenient, maybe medium of exchange. It might be similar to like gold and silver, where gold demonetized silver, and silver couldn't hold its monetary premium.